Now, though, it is time for ETF Friday. MSCI has sped up its China A shares inclusion timeline, and it's stirred up the markets the last few days, as we well know. Here to tell us more is James Seyffart, Bloomberg Intelligent ETF analyst. James, what's going on with this timeline? Why did it change, and how is it impacting the market?
Yeah, so the flows into Chinese ETFs have increased dramatically. So when you look at Chinese ETFs, there's two ways that you look at flows. The most common and obvious way is ETFs focused on China and money going there. But the more dominant way that money flows into Chinese equity, is via broader ETFs, typically emerging markets, because China makes up 30%. So more money typically goes into emerging markets ETFs, and 30% of that money is going to Chinese equity. Typically, that makes up the dominant flow into Chinese equities. But recently, after this announcement on February 28th, we've seen over $700 million go directly into Chinese ETFs. And that's a change of historical preference.
Not all Chinese ETFs are made equal. What is interesting, you dig around in them and you realize that some of them are just kind of like Baba, Tencent, and the really big stocks, and others are kind of much broader. So kind of walk me through the differences. Yeah,
so to understand the differences, you kind of need to understand the Chinese market, which is pretty segmented. So there's all these different share types, and they're broken up based on where the company's incorporated, the country that the stock is listed in, who can invest in them, how much of the company is owned by the government of China. And we're not going to get into too many details about all of those things, but the ones we care about are what are known as A shares, and they're listed on Shenzhen and Shanghai. Up until 2003, they were restricted to foreign investors. Since 2003, they've gradually allowed foreign investors to invest in these things, and MSCI has rewarded in kind by including these things in their indices. Trillions of dollars track their indices. So what's surprising here isn't that they're including the China A shares. We've known for some time that they're going to do this, but on February 28th, they made an announcement they were basically stepping up this gradual inclusion, so it's going to happen 7 months earlier. So, go ahead.
Well, I was just going to say, what are some of the ETFs involved, and how has performance been?
Yeah, so when you're looking at these things, some of the ETFs, you need to understand which shares are allowed to be invested in these ETFs. There's the first ETF to invest in A shares is the Deutsche X-Trackers, ticker ASHR. So that invests solely in A shares. A lot of these earlier ones had nothing as exposed to that type of market. They were very nuanced and narrow in what they can invest in. Performance-wise, the A shares have actually outperformed the S&P 500 over the past 5 years. But if you look at another Deutsche X-Trackers product, ticker CN, it's the only ETF out there that gives you the most broad exposure to what is the Chinese equity market. And that's even performed better and on less volatility. But to note is the underperformance of Chinese equities overnight in trading in Asia. Chinese equities got hit hard, especially the Chinese tech stocks. So we'll see how that goes today.